Hi traders, this is Chris Buss with Traders Profit Compass. It's Thursday, October 29th, and I'd like to cover off the home builder segment this evening for you. It's an important segment in the consumer discretionary space, and as we've all known and heard, home builders have been doing very well off the lows with pent-up demand coupled with low interest rates. There's been a strong demand for homes, probably even a shortage actually when you look at supply, and home prices have been rising rather dramatically. But we're interested in the stock prices, not necessarily how the demand and whatnot goes on with the actual homes. We're interested in how the price action is behaving with the stocks involved. And one of the things that jumped out to me when I started digging into the sector was relative strength. And that's an important key, because once you lose relative strength compared to SPY, then you're on the wrong side of the chart, as it were. And you can see here, I don't have the timetable detailed in the charts, but this is the March low. Okay, and you can see right out of the gate, home builders have been outperforming SPY the whole way until just a couple weeks ago. And here is when the trend broke on relative strength. And normally, if you were in the whole time and you were dialed in on the sector, either as a whole with the ETFs or individual names, you always want to keep an eye on relative strength. And usually that's a big warning flag when the relative strength in a chart or a sector breaks, because usually, and there's always exceptions, usually they don't simply bounce right back above trend. Usually, it takes a certain amount of time, digestion, sell-off, correction, whatever you want to call it. And we're in the midst of that now in the home builder sector, excuse me. This is the Dow Jones home builder metric. And I have a whole list. I mean, there's over 100 in the, there's a Dow Jones US chart for every sector that's out there. And this is the one for home builders. It's not a tradable ETF or anything. It's just a composite of the whole group. And what you'll see here is very indicative of what you'll see when we flip through the charts. We've got a trend line off the lows. Here we've got, there was an initial break where support held, and then a rising wedge. And what has happened in most of these charts is just a couple weeks ago, they put in divergent highs. And what I mean by that is you can see price rising, but momentum falling and RSI falling. So right here at this high, you had momentum here, which was even at a lower level than where it was way back here. RSI hit a high, and then price went higher, but momentum was falling and RSI was falling as well. And if you were in the trade, the divergence, recall, is not a sell signal, but it's a big waving yellow flag. And had you, if you were in the sector and you had your trend line drawn, your sell signal comes on the break of that trend. And that just happened a couple weeks ago. And you can see that price has really let go over the last couple weeks and now is down at key support back at the February high. Okay, so this is a key level to hold. You can see the 200, just below. And then the next big level, should this break, is way down here. It's at 1100 now. And key support, if this were to break, is down at this high volume over price bar at 925. So that's, what is that? Well, it's basically 200 out of 1100, so that's close to 20%, 18%, something like that. So, make a long story short, rolled out of a divergent high at key support, got a hold right here for the group. Now, if we go down to the tradable ETF that focuses exclusively on home builders, it's ITB. And you can see here, I don't, well, actually, I do have it marked. We have the divergent high set up. We have the rising wedge. And now that has broken, and prices here in no man's land, caught in between resistance and support. Here's your February high at 50. So there's not a trade to make right here, in my opinion. If you're focused on this ETF, what has to happen is one of two things. One, price just proceeds down here to 50, where there'll be, a moment of truth for the price, or there's a kickback rally up towards 57, which would offer a really nice objective, low risk, short entry against 57 with a stop just above. And, remember, a break of a key level, kick back, revisit the scene of the crime, then fail. If it were to go right down here to 50, then we'll have to wait and see. As long as it holds, it would be an objective long. If momentum flattens out and begins to curl up, you may see a long opportunity here at 50 for a bounce. But if that were to fail, then your high volume bar and your target would be 44. So 50 to 44, you do have the 200 coming in, which I would expect would pose some resistance. But from a technical standpoint, once the 200 failed, then you're going to get a fast move down to 44. And given that momentum has been falling the whole time, this isn't just a little blip. This has been going on for quite a while in terms of the RSI and the momentum falling. So, and the thing about it is, we're at peak home buying. So, is this as good as it gets? Or is this just a dip to buy and then we're off to new highs next year with stimulus and all that other kind of stuff? So we'll have to wait and see and let price action be our guide, not get into the macro weeds of, what might happen in the first quarter of next year, but just follow price. As long as 50 holds, then the group holds. If it doesn't hold, then down we go. Let's get into some individual names. I don't have every single name, but I've got the bigger players. Here's Beazer. It's been a relative underperformer versus its peers in the group. I did a little relative strength study with this one against the group, and it was lagging. It has the divergent high, as we've discussed, but it has not fully broken down yet, hovering right here at support at 13 and trendline support. And you can see the pivot point right here at 1275 or so. So if you were looking for a trade on Beazer, here's your spot. If it can hold 13 and get a bounce, you can be long against the trend line and this support level with a low risk long opportunity with a stop just below. But if it breaks say 12.5, then you're looking at 11.5 for the 200 and 11 for the next key support level. That doesn't sound like a lot, you know, it's $1.50, but in percentage terms, you know, it's $1.50 out of 12, so that's a decent drop if it were to occur. And while I'm on the topic, I have not scrubbed these for earnings, so I don't know where these fall in the cycle. Please do your own due diligence. And you know, as we just saw in FANG, we're right after the FANG earnings. A lot of good numbers, a lot of bad price action. So it's not a given that, you know, you don't know what's going to happen on earnings, so you just got to wait. And if there's a big gap down, then, you know, you have to pick it up after the earnings announcement and then play it from there, in my opinion. DHI, I think it's DR Horton, rising wedge, divergent high, falling RSI, falling PPO, price right at support at 67.50. And this is an important name in the group, one of the bigger names along with Lennar and Pulte and Toll Brothers. So this is going to carry more weight than you know, your Beazer or your KB Homes that are relatively small. A break here, you're going to get a fast move down to 60, you know, a 10% drop, because there's nothing here as far as technical support. And you can see the February high was right here at 60.61, right in line with the 200. So that's got to hold. As long as it does, you've got an objective long. But if it breaks, then you got to flip short immediately. And, you know, that's how my assessment goes. I can't tell you if this is going to hold or not. All I can tell you is that it has rolled out of a divergent high. And usually when that happens, it's not just a little, you know, baby breakdown. It's usually something more. And given the posture of RSI and PPO, momentum going bearish, RSI going bearish, the posture of everything does not look strong. Could we get, you know, an oversold bounce right here? Sure, that can happen at any time. Or, you know, the whole group revives itself on earnings and then it pops. So we're at a delicate spot here, as you can tell, right here at 67.50. Hoverian, smaller operation, but the same technical setup. Dramatically lower RSI with a trend break. Dramatically lower momentum with a divergent high. What hasn't happened here is a break of the first support right here at 31. That's your key on this stock. If it were to break 31, I think you're going to come right back down to the 200. And that's a recurring theme as we go through. We're at a point where it's not quite as evident because everything's bunched together. But in a lot of these circumstances, price is below all the moving averages except for the 200. And that puts things in a bearish posture. Now, right here on this particular stock, you've got the 50 sandwiched right in there between 31 and price. So If price can jump back above trend here, that would be bullish, and you would probably see an upturn with RSI and PPO. It has not gone bearish yet like the other ones have. So right here, I would characterize it as, you know, okay so far, but 31's got to be in your crosshairs, and if you're long, that's got to be your exit point on any breakdown below 31. Here's KB Homes. It's already at the 200, so a lot weaker in comparison to the other ones. Same kind of posture though, divergent high here, break of trend, quick rug pull down to the 200. Now 32 is in the crosshairs. If we see the bigger names, DHI, Lennar, Pulte, start to break, you can be sure that KBH is going to lose this 32, and then it becomes, you know, hold on for dear life, because there's not much below. I mean, you've got a level here at 29 at the swing low in July that could possibly hold, but if the whole group lets go, this is going to underperform, just given, you know, that it is leading to the downside. It's already at its 200. So any break below 32 is a definite short, and then your first target would be in this 28, 29 area, but then after that it really falls away fast below 32. Lennar, big, I think the biggest name in the group by market cap, but certainly one of the big three, I would say. Divergent high, declining PPO, declining RSI with a break well below 50, right here at key support and at the February high. So that's in the crosshairs, 70. As long as it holds, it can help hold the group together. But if it breaks lower. Now, as far as trading goes, I think this is a tougher short, and I'll tell you why. You've got the 200 just a couple bucks below, then you've got a layer at 65, and those may be areas that this stock may find support and bounce relatively close by. It looks to me that if 65 were to break, it would be a better short, because then you've got a 750 move, a clear path of 750 to the downside until you get to this high volume over price bar. So if you want to be long, you can be long against 70 with a stop just below. But if it breaks, I would exit. I wouldn't enter a short here unless you've got, you know, really good patience and you want to take a shot at it. My short would be at 65 and then look for 57 on this move right here. MDC, same setup, divergence, trendline break, below all the EMAs, below key support here, down below 44, trading down around 43 or so. If you want to short it here, you can. A nicer setup. You don't always get nicer, you don't always get perfect, but if you were to have a green day that kicked it back to 44, that would be a nice short. Now, I want to talk a little bit about the upside potential here. let's say Lennar and DHI and those big guys hold, and it looks like they're turning around. If you had your eye on MDC and it reclaimed this 4450 area and got back above that, and it looked like the group was turning around, that would be your long. Remember, reclaiming a key level from below is bullish. If you got a kickback and it broke out here, you could take it long, and then your target would be the prior high at 52. So even though the posture of everything looks bearish, reversals do happen, and there's room here for this to flatten out and turn around. So if the group gathers itself and you find stocks that have had the initial breakdown but then recover that key level, that's a beautiful entry point for a low risk long where you can get in at a good level for a bounce. And if things turn around and things go gangbusters in the over the holiday season and into the first quarter, there's no reason I can't see that couldn't happen. So keep your posture tied to the price. If you can be bearish all you want, but if price breaks back up above this key level, you've got to let that go and then look to the long side because of the technical move that has just been made. But as long as it's below, you got to favor the short side. Pulte, another big name in the group. Bad breakdown. Same setup, further advanced, already at the 200. Again, this sets up for a short. If it were to kick back to 43 and hold, then you can initiate that short and look for 38 on the downside. I don't think, once the 200 is tagged, you often see that first bounce on the initial tag of the 200. If it were to kick back up and then come back down, oftentimes that's when your key level or your key moving average would fail. And you can see here that this is the large price over volume bar. So that's the mega line in the sand, 38.50. If it did make that move and you got short and it came down here to 38.50 and were to fail, then you got a fast move to 33. And that's how I see that. If it reclaims 43, it's just like I said before, false breakdown and then recapture. You can try to take it long there. But you can see at this level, even at 43, it would be below the 50. That might be a harder long to take. And I would think twice about that one, actually. Now that I look at it, you got the declining 20 and the declining 50 that will act as resistance on any move back above. And you can see here you've got dual volume over price resistance now, and the wall, if you will, might be a little higher than 43. It might be in here against these declining moving averages. So be careful on that long. That's not as clean as the other ones. Toll Brothers, broken record, same story. Divergent high breakdown of trend. Lost this first level at 46. Has lost the 50. Now price is below everything except the 200 that comes in here at 39. Any baby move higher against 46 but doesn't break above would be a short looking for 39. That's a good move. That's $7 on a $45 stock. That's, you know, that's a big move. So now here, let's look at the difference in the setups. We talked about on the prior one how even if it broke that first level, it would still be below the declining averages. That's not the case here. If you saw Toll Brothers come back up and break out above 46, it will have reclaimed the 50, it will have reclaimed the support level, and it will have reclaimed the 20 EMA. And that's the green light for a long. That would be a much higher probability trade than the one we just looked at. So I like that one a lot better if there were to be a turnaround to take that long above 46 and all these moving averages, because then it would be above everything, above support or above resistance and above all the moving averages. So that would be a more appealing long than the prior one. But as it stands now, it's a bearish posture, and I would be looking first to the short side and then make price prove that it's going to do a turnaround and break out before I would abandon the short idea. That's all I've got. Those are all the stocks in the group. Let's kind of pull it together and recap it. The group appears to be in a down cycle. It has lost relative performance both to consumer discretionary and SPY itself. That is a red flag. You generally don't want to be long stocks that are underperforming, you know, the benchmark, either, you know, a consumer discretionary group. I mean, why be long an underperforming group? You either step aside or you look for short ideas. Now, if it were to recapture that relative strength, that's a whole new ball game. But as it stands now, it's, you know, either step aside and just wait for, you know, a turnaround, or you look short. There's not one name in the group that's outright bullish. There are some that are marginally better than others, you know, hanging by a thread, as it were. But the big guys, D.R. Horton, Lennar, Pulte, those guys have either broken down or are sitting at an uber key level like D.R. Horton and Lennar. Those are two of the biggest names. They're sitting on key support. If those let go, then you're going to see, you know, more of a wholesale breakdown in the group. Right now, there's some that are weaker than others, which is always the case. But the big market cap names are right at the spot where they've got a hold. And, you know, when I looked at this group, my shoulders kind of sagged because there were some beautiful shorting opportunities that were missed. And while we're on that topic, what I'm going to do, and it should have been done long ago, is set up a little schedule of reviewing groups that I'm interested in. And it only takes a second to look at the either the tradable ETF or the industry group composite chart. You know, I can look through 20 charts in 15 minutes and can tell right away, you know, is something developing or not developing. And if you systematically go through the groups that you're interested in and do that flip through on the weekend, if you work full time, or if you're more of a, you know, full-time trader, set aside in your schedule an hour, an hour or two a week to flip through all those industry group charts, because here's the deal. Birds of a feather flock together. There may be an exception here or there of, one stock in a group that's, flying high and the other ones are falling apart, but it's very rare. You see it here. The group is breaking down and all the stocks in the group are breaking down, some more than others, but they're breaking down. And if you can see that on a group chart, then you can drill down, or on a breakout. If you see an industry group, making a turn or breaking a trend line or whatever to the upside, then you can drill down and find your outperformers, the ones you want to get long in that group, and find the strong stocks. So I'm going to work on setting up a schedule to do that. And I think there'll be much fewer instances of, stumbling upon a group that you could have made a killing on, but you were just ignorant of it. You hadn't seen it. You missed it. So that's what I'm going to do. And I think it would be a great idea for you to do that as well. And it really doesn't take much time. The time part is setting up, finding the industry group names and symbols and then loading them into a chart list. And then once that's done, the hard part is over. So anyhow, I hope you found the information useful. I think there's quite a number of relatively tight setups that are going to be good trades. And I don't think it's going to take weeks. I think it's going to take days, honestly. And maybe everything, rockets forward after the election. But I'm dialed in on this sector now, and I've set my alarms at the locations that we discussed on the charts. And the last thing to check is when are earnings. I have no idea. They could be tomorrow or in a month and a half. I have no idea. So I'll take a look at that. I won't be participating during earnings, but those are often a catalyst for the next move. And if they're all great and they rocket higher, we'll have some good entry points on the long side if those levels are recaptured. And then if they fall apart, then they fall apart. We've got our levels pre-identified. So anyhow, I hope you found the information useful. If you're new to the channel and you like the content, hit the subscribe button and then hit the alarm bell, and you'll get notified of all the new content I post. And then over in the show notes, there's links to the blog site. You'll find a lot of interesting information there that never make it to video. So look in the trade school section, and some of the trading psychology articles will be beneficial to traders at any level. I think they'd be helpful. And then you can register for my content. There's a link there to do that. It's free. It gets you an email every time I send out information, and that's usually 2 to 3 times a day. So I will keep you locked and loaded with actionable, timely content. And after that, you can focus on execution. So also, if you register for the content, you'll get a link to our trading room, where you'll find a lot of friendly traders, a lot of smart traders in there. I've been amazed at some of the setups and trades that have been made in there that I'd be proud of. So there's some sharp guys in there. You can learn from them, and worst case scenario, you'll make a lot of friends and expand your trading network, and that's never a bad thing. So this has been Chris Buss with Traders Profit Compass. Talk to you next time.